everyone! Welcome back to the channel! Today, I'm sharing a story that still gives me chills. It is the story of how I almost lost $100,000 on a single property deal in the United States. This wasn't some rookie mistake from years ago. This was recent, and it was a harsh reminder that real estate is never a guaranteed win. My goal here isn't to scare you, but to show you the hidden traps so you can avoid them. This is the raw, unfiltered story of a deal that almost went catastrophically wrong. So, let's set the scene. I found what seemed like the perfect property. It was a single-family home in a growing suburban area. The numbers looked incredible on paper. The purchase price was well below market value. The rental estimates were strong, and my calculations showed a fantastic cash-and-cash return. I was excited. I thought, this is it. This is the one! I had my financing lined up, my down payment ready, and I was eager to get the keys and start renovating. I even had a contractor on standby. My team and I did our due diligence, or so I thought. We ran the comps, analyzed the neighborhood's growth trajectory, and even drove by the property multiple times. It was a bit of a fixer-upper, but nothing that seemed too daunting. This seller was motivated, and the negotiations went smoothly. We agreed on a price, and the contract was signed. The initial deposit, a hefty sum, was sent to the escrow company. Everything was moving forward exactly as planned. I was already picturing the finished renovation and the happy tenants moving in. That feeling of a deal coming together is intoxicating, and I was definitely caught up in it. The first crack in this perfect picture appeared during the inspection period. The inspector's report came back, and it was a bit longer than I'd anticipated. There were the usual things you'd expect in an older home. Some minor plumbing issues, a few electrical outlets that needed updating. But then there were bigger ticket items. The roof was nearing the end of its life, and the HVAC system was ancient. Okay, I thought, I can handle this. I'll just adjust my renovation budget. I went back to the seller and we negotiated a credit for some of the repairs. They agreed, and I felt like I had dodged a bullet and even scored a better deal. The closing date was set, and I was feeling confident again. This is where things started to go sideways, fast. The day before we were scheduled to close, I got a call from my real estate agent. The tone of her voice immediately told me something was wrong. She said, "There's a problem with the title." For those who don't know, the title is basically the legal proof that the seller has the right to sell the property. A clean title is everything. It turns out the title search company had discovered a lien on the property. A lien is a legal claim against an asset, usually to satisfy a debt. In this case, it was a massive, unexpected mechanics lien from a contractor who had done work on the house years ago and was never paid. This wasn't a small lien for a few $1,000s. This was a 5-figure lien that completely wiped out the seller's equity and then some. The seller claimed they had no idea it existed. Whether that was true or not, it didn't matter. The lien had to be paid off before the title could be transferred to me. Suddenly, the seller didn't have the funds to clear the lien and close the deal. The entire transaction came to a screeching halt. My large deposit, my $100,000, was sitting in escrow, and I couldn't close on the property. But I couldn't just walk away and get my money back either. We were in a legal gray area. The next few weeks were a nightmare. My money was completely tied up. I was on the phone daily with my agent, my attorney, and the title company. We explored every possible option. Could the seller get a personal loan to pay off the lien? No. Could the lien holder negotiate a smaller payoff? They weren't willing to budge. The deal was dead in the water, and my massive deposit was being held hostage. The contract had clauses about title defects, but the situation was complex. There was a very real possibility that I would have to forfeit my entire deposit if we could unresolve the issue or legally terminate the contract. That's $100,000 just gone. The stress was immense. All my projected profits were replaced by the terrifying prospect of a 6-figure loss. This is the critical lesson I want to share. Always, always buy title insurance. It's not optional. It's a non-negotiable part of any real estate transaction in the US. Title insurance is what protects you the buyer from exactly this kind of disaster. It insures you against any past claims or liens on the property that might have been missed during the title search. In my case, because we were in the process of getting title insurance as part of the closing, the title company caught the lien asterisk before asterisk we closed. If they had missed it and we had closed, I would have inherited that massive debt. The property would have been mine, but so would the lien. The title insurance policy would have been my only financial protection. The second lesson is about due diligence. We did our homework, but we could have dug deeper. We relied on the standard title search. In retrospect, for a deal of this size, especially with a motivated seller and a property that needed work, a more extensive background check on the property's history might have been wise. Sometimes, the best deals on paper are the ones with the most hidden problems. That low price can be a red flag. It's crucial to ask why. Why is the seller so motivated? Is there something they aren't telling you? Don't let the allure of a great price blind you to potential risks. So, how did it all end? After weeks of legal back and forth, my attorney found a way to legally terminate the contract based on the seller's inability to provide a clear and marketable title. It wasn't easy, and it cost me thousands in legal fees, but finally, the escrow company was authorized to release my deposit. I got my $100,000 back. The relief was indescribable. I didn't make any money, and I actually lost money on legal and inspection fees, but I didn't lose my entire investment. I walked away from the deal with a very expensive lesson. That experience fundamentally changed how I approach real estate investing. I'm now more cautious, more meticulous, and I have a much deeper respect for the legal and administrative side of things. I now view title insurance not as a cost, but as one of the most valuable investments you can make in a deal. I also learned to trust my gut. If a deal feels too good to be true, it's worth taking a step back and asking the tough questions. Don't let deal fever cloud your judgment. Investing in U.S. real estate can be incredibly rewarding, but it's a professional sport. You need a great team of sharp agent, a thorough inspector, and a rock-solid real estate attorney. Don't cheap out on your team. Their expertise is what will protect you when things go wrong. I hope by sharing this story, I can help at least one of you avoid the same stressful and potentially catastrophic situation. Do your homework, protect yourself with insurance, and build a team you can trust. Thanks so much for watching and for letting me share this personal story. If you've had a similar close call in real estate, I'd love to hear about it in the comments. Let's learn from each other. Don't forget to like this video if you found it helpful and subscribe for more real-world investing stories and tips. I'll see you in the next one.